Imagine investing in the electric vehicle revolution, only to witness the value of your investment unexpectedly plummet. This is the situation facing NIO, a once promising player in the EV market, with its stock currently hovering around $5.09 and showing a short-term bearish trend. Analysts are divided on its future prospects. Looking ahead to 2025, NIO's stock is predicted to experience significant volatility. Experts forecast a steep decline, with prices potentially dropping as low as $1.02. This downward trend can be attributed to intense competition, macroeconomic pressures, and concerns over profitability. However, there might be a temporary recovery in mid-2025, with prices possibly reaching $1.59 before stabilizing. This forecast raises important questions for investors. Is NIO a short-term risk or a long-term opportunity? While the company boasts innovative technology and a solid market position, cautious investors may consider exploring alternative EV stocks or holding off until signs of stability emerge. Ultimately, the decision to buy, sell, or hold NIO stock carries inherent risks, especially in a fast-paced industry like EV. We invite you to share your thoughts in the comments below and subscribe for more in-depth stock analyses. Remember, careful evaluation and analysis are crucial when navigating the ever-changing landscape of investments.